Hi everyone, thanks ever so much for joining me once again. I'm going to talk you through today a couple of trades that I took that absolutely fit the profile of the type of trades that I take regularly, and I'm going to explain why I took the trades, why they're perfect, and why I think that traders who want to, make a living from this and work effectively from themselves for a few minutes or a few hours a day, why they're the sort of trades that you would be beneficial looking for, that would benefit you. I've already said on my videos, I look for three things really. I look for what's the probability on this trade, and I'm going to talk you through the probability on these trades. And I also look for, what risk is there in the trade outside of the probability? What risk is there? What am I putting at risk in terms of where's my stop, where's my entry, and what's the difference between the two? And what is the likely reward? So they're the three things: probability, risk, and reward. And once you've got these three things in your mind, then basically you're just looking at the chart and saying, right, I'm going to wait until the chart's in position and then I'm going to take my trade. And that's effectively what you need to do. You can sit there for an hour and nothing appears according to what you're looking for, and that's trading. This is not a computer game. The human brain, the human mind is influenced by history, by events in the past, and switching on a computer and turning on the computer game, or a console, turning on the computer game, you expect to be in the game right away, don't you? And trading's not like that. You're not in the game until you're in a trade, and then basically there's only one way to end it, and that's by exiting the trade at some point in time. And the beginning of candlesticks are the end of the previous candlestick, and it's what you look at right at the end of a candlestick, in the second that a new candlestick opens. It's what you're looking at then that will determine whether it's successful or not. And on 90 odd % of candlesticks, there is no trade, because the risk and reward, or the probability, isn't right. And and you need to discipline yourself for that. That's what, when people talk about discipline, that's what they're talking about in trading, is staying out until there is a trade for you that sets up according to your criteria. So, these are one type of trade, and honestly, you have to start with one type of trade and stay out of the market most of the time. And then once you get used to that type of trade and you're trading it 100% of the time, and only that trade 100% of the time, then if you want to add to that with other trades, you can do so. I normally stay in a trade for one candlestick, no more, maybe two, no more. But if I'm looking, as you will see in a minute, at the 5-minute chart and the 1-minute chart, and I take the trade on the 5-minute chart, then for one candlestick, you're looking at 5 candlesticks on the 1-minute chart. And, 2 candlesticks on the 5-minute chart is 10 candlesticks on the 1-minute chart. That's how it works. So let's go ahead and have a look at the charts. If you've got any questions, do let me know. Leave a message in the comments below, or get in touch with me via my website at excellenceassured.com. Okay, let's go to the charts. Here we go. So this is the Dow futures, and on the left-hand side of the screen, you've got the 5-minute chart. On the right-hand side, the 1-minute chart. So I use normally the 5-minute chart as a master time frame and the 1-minute chart for the trading time frame. But on this occasion, I was watching the 1-minute chart, and at the end of a candlestick, I looked over, and this candlestick here, this first one of the two green ones, in the grey box, this one I noticed. I looked up here, you can't see, but I've got the clock on the computer running by seconds, and I noticed that that it was the end of the 5-minute candlestick, and it's perfectly lined up. And I thought, right, well, I'm going to ignore this chart, and I'm just going to focus on this particular chart here, and I'm going to take the trade. So this candlestick here relates to, and this entry position, which was actually here, relates to this here, this price action here on the 1-minute chart. And so I was basically just waiting on this. After this candlestick, I was waiting for price to, and the candlestick to go green, and then I was entering. The reason for the fact that it was a perfect trade was that price on this candlestick had closed above the 8 and the 20 EMA, so you've got value below, and the price is in an uptrend, so you've got higher highs, higher lows, and therefore the probability is, with the position of this, the probability is that the next candlestick is going to have a green body. And on my day trading course, I talk about two-legged moves, and basically the first candlestick is often matched in size by a second leg to an individual trend leg, and this is the second leg, and you can see the candlestick's almost the same size. So this move went from there to there, and this move went from there, well, eventually right up here. But you get the principle. So you can see it easier on here, really. First leg up to here, second leg up to here, almost the same size. And that's a two-legged trend leg. Are you getting this? There we go. So this is why it's perfect. It's also perfect on the 1-minute chart, although I was paying no attention to that. I was paying attention to the 5-minute chart. So you can see what I was looking at was, if this bit here, this tail on the candlestick, if it was right down here and I'm entering here, that's no good, because that's therefore my risk. But my stop goes below the low of this candlestick here, which is also on the other side of the river of value, the difference between the 8 and the 20 EMAs. And therefore you've got 4 levels of support for the trade. If the entry is when this candlestick has just gone green, you've got the low of the candlestick, the open of the candlestick, you've got the 20 EMA and the 8 EMA. So wow, there's your probability. There's your probability, all of those factors. And your risk is this, which was, I think, 6 points, and plus the spread, if there is one on this particular trade and this market, which there was. And so you've got that, and then you've got the gain. Well, the gain is where you exit. See the previous high on the candlestick here and the high here, that's a good exit. Or even at the close, which is, I took it at the close, so not perfect, but pretty good, and 6-1 reward to risk I got. And 6-1, yeah, brilliant. brilliant. If every trade you take, you get rewards of 3, 4, 5, 6 to 1, then you got to be onto a winner. And then the following candlesticks, there's a big gap between the low of the candlesticks and the 8 EMA, and therefore price eventually came back and touched it. And by the time it did, the momentum was built up so much that it went through. But this was the trade here. This was the trade here. And notice that you've got here an indecision candlestick. The indecision candlestick then provided momentum from the river of value for more of what had preceded it. And that's often what happens. So this is the 5-minute chart. There's your risk, there's your entry, and this is the 1-minute chart. And so that was the end of the 5-minute. There's your indecision candle and entry. And so all good on that particular trade. I hope that you're starting to get the picture of what I'm looking for. These candlesticks, just going back here, these type of candlesticks do not appear on a regular basis. You've got all these candlesticks in here, and what have you got? You've got one here, that candlestick, big tail, small body, below the 8 EMA, followed by small wick on it there, and then red, then entry, small wick down, because this candlestick here had a big gap between the bottom and the 8 EMA, and also the wick on it was, a good length, and it was 50% plus of the overall size of the candlestick. So, as I pointed out in previous videos, that's a good sign, and quite often sets off a reverse trend leg. So you've got an up trend leg, a down trend leg, and tiny wick on the top, down. And that was a fantastic risk to reward opportunity in there as well. These are the type of trades that that I take, and they're highly successful. If you're getting that level of reward to your risk, then you're onto a winner. The probability is measured by 3 C's: context, content, and confluence. Learn about all of these things on my day trading course, and this is Ants Gold. Hope you've enjoyed it. Do subscribe if you want more of these type of videos. Ask any questions you want, and contact me via the comments below or via my website at excellenceassured.com. Thanks for joining me. Catch you on the next video. Bye for now.